So this guy posts one meme after 3 years and the stock market goes nuts. Joining me to explain is Jason Tartick. You may know him from ABC's The Bachelorette, but he worked as a banker for nearly 10 years before landing on the show. He's also a best-selling author and the host of the Trading Secrets podcast. Jason, thanks for coming on the show. Appreciate it. All right, so what's going on here?
I mean, it's really hard to explain, but I think what we're seeing in 2024 is that individual investors can have a massive impact on individual securities. Heard some of the numbers you guys said. Short sellers have now lost over $2 billion just in 48 hours as a result of this. And to put in perspective, last month, these short sellers were up over $400 million. So you're seeing an individual, as you said, post cryptic memes. By the way, not even words. I think the last meme I saw him post was Mel Gibson screaming freedom in Braveheart, and it just had GameStop going across the video montage. Just video montage, and this individual is having just huge material impact on these individual equities.
But isn't this really dangerous for the individuals who are continuing to buy this stuff up at these elevated prices?
I mean, I think what we're seeing is that there's a tailwind for high-risk-based assets, right? So people right now are talking about where do I make money, not where do I protect my money. As a result of that, sometimes we signal that as a means that we're in a bubble. But when we talk about high-risk moves, like if you deviate from your long-term risk tolerance and your long-term plan, you're taking on high risk. And when you look at some of these moves, I think where I get concerned is that your average investor that's just trying to, catch up with the people that are talking about on Twitter get caught allocating way too much of their portfolio to something that is so high risk like this. So there's definitely some concern out there, and people should really understand what the risk tolerance is before deviating their plan for sure.
But isn't it going to crash at some point in the relatively near future?
I mean, here's the deal, right? When you look at trading, like fundamentals, none of this is based on fundamentals. We're not looking at the underlying asset and making a very technical decision based on what's happening with the company. We're actually just moving based on reaction and what we're seeing with short sellers. We know there's a lot of short seller interest. That was there in 2021, and they got caught. I think what's really interesting, though, is you said David versus Goliath. I look at it like minnows versus sharks. For so many decades, the minnows could never compete with the institutions. Those are the sharks, the hedge funds. And now, because of social media, all the minnows can gather together, and they're killing sharks by the second. And there are a ton of people making a lot of money off it. We saw Keith make literally 50-some thousand turned into 50-some million. So the money can be made. You just have to understand that the exposure to high-risk assets, there's a lot of volatility with it.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your cable provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.